Here's a simple explanation to what supply and demand is in Forex trading. Stick around until the end. A supply zone is when there's too much of a certain entity and the price of that entity drops so it sells quicker. And in a chart, it'll look like this. A demand zone is when there's too little of that entity, so the price of it goes up because that entity is in demand. And in a chart, it looks like this. Heading over to the charts, my favorite time frame to look at these is the 4-hour time frame. And in this example, you're going to see that we have a range where price is moving sideways. If you look closely, you're going to see we have our supply zone over here. And this is determined by the impulsive move, which is identified by a large drop through this candlestick here. So what I'll do when I see a supply zone being formed is I'll mark this area, wait for price to go back in that certain area of the supply zone, and then I'll make my sell right in that zone. And you can see if you sold in this area, your take profit would have been hit when the price went back to test the line of support. Let's take a look at another scenario where it's a demand zone. In this example, we have a clear uptrend. And remember, when price is going up, we're looking for buys. So again, we see our impulsive move, which then determines the demand zone. Then we wait for price to go back into that zone, and that's where we're going to make our buy. And since this is price action that we're trading, we're going to aim our take profit at the break of structure area right over here. And I teach this and many other tips and tricks on my page, as well as one-on-one mentorship. Check out my page, and also head over to my series that's linked on this video. I promise you, you'll learn a thing or two.